Good morning, ladies. I am so excited for our talk about finance and how to get your financial team all working synergistically together. So, to kick us off, I know all of you lovely ladies, but for those that are watching this, why don't you go around and introduce yourself? Tell us a little bit about who you are, what you do, who you work with. We'll start with Sherrill and then we'll go to Jennifer and then Kaitlyn, you'll bring us round circle.
Oh, good morning. First of all, thank you for having me.
Of
I'm
course.
excited to be here. I'm Sherrill Morales. I'm a CPA. I am a partner with Atchley and Associates, which is a full-service Austin-based accounting firm. And I've spent 35 years working alongside business owners in all stages of growth of their businesses, working with their families, other organizations, and I'm here to talk about the importance of your CPA in your financial planning group and how we can help.
Beautiful, beautiful. Okay, Jennifer.
Hi, I'm Jennifer Yousem, and I echo what Sherrill said. Thank you for having us.
Mhm.
I am the founder of I Heart EBITDA. We are an outsourced bookkeeping controller and fractional CFO advisory firm. Uh, Essentially, think of us as anything an in-house finance team would do. And we do it on an outsourced basis. And this is like my favorite topic because I think everybody that I talk to confuses what we all do for a living. And I
Mhm.
oftentimes get aren't you guys all the same? I'm like, no, not even remotely close. And you need all of us. So.
Yep, beautiful. Okay, Kaitlyn.
Well, thank you for having me, Lauren. I'm excited to be here. My name is Kaitlyn Carlson, and I am the founder of Theory Planning Partners, which is a boutique wealth creation firm for successful female entrepreneurs. And our mission is to help women translate their business success into personal wealth. And yes, we absolutely need what I call the golden triangle around entrepreneurs. So we need a certified financial planner, we need a certified financial planner, a CPA, and a CFO. And if we can surround an entrepreneur with those three things, it allows the entrepreneur to operate in their zone of genius, which allows them to in turn make more money and create more wealth for their families. So
Hmm.
we are on a mission to do that. My background is in private wealth management. So I worked with centimillionaires and billionaires in my previous life. And my mission was to bring the strategy and service and support I was giving $100 million families, bring that to ambitious female entrepreneurs, because I felt like if we did that, then we could make a pretty significant difference in their lives.
Hmm. I love that. Okay, I'm gonna let someone else that just popped in the waiting room in. So give me a hot sec. So in terms of like your expertise, what do you wish people would ask you that you don't? Who that they don't ask you currently? Who wants to go first?
I'll take that.
Okay.
Um, I I think I would say like the biggest disappointment or what I wish people would is there's this idea that if you outsource your whatever, whether it's, bookkeeping and finance work or your investments or your taxes, that you're passing it off to someone. And what I think people don't understand is you can pass off the doing, but you can't pass off the knowing and
Mhm.
understanding. And so what I wish people would do is really view I think people are like afraid of finance. I think I wish they would dig in a little more and take the time to get over whatever their hump is. There's like a lot of agita and trauma and whatever around money. So I think women in particular tend to be like, you got this. And so I wish clients would spend a little more time with their finances.
Mm, that's great. Either of you ladies want to chime in?
I'll go next. So I wish that they would ask me, if I make this decision now, what is that going to create for me in the future?
Ooh.
As far as taxes, cash flow, what do I need to be thinking about? It's CPAs, where we can be strategists if we're let into the conversation early enough.
Mm. So true. Oh, so true. Kaitlyn, I see you nodding along.
Oh yeah, I am like such a big advocate for this conversation. The thing that I wish business owners did is I wish they took a step back and asked, what do I want my life to look like? Like, if I'm laying on my deathbed and I'm looking back, what's going to make me think, wow, that was so beautiful and I did everything I came here to do?
Hmm.
You need to start with that level of intention because casting that vision becomes easy to quantify. And quantifying it gives us a roadmap for what the business needs to accomplish for the founder. It's really that simple at the end of the day. And we just help go on that journey alongside you. But if we're describing like hiking and descending a mountain together, you're responsible for casting the peaks for that journey. And how you want to scale that mountain is we can be a partner with you in that decision. But like Jennifer was saying, there is an element of we're going to show up and do our half. You have to show up and do yours.
Mm. I love that. Because that's so much of the work that I do with my clients, which I just realized I didn't actually introduce myself. So anyone watching, hi, I'm Lauren Goldstein, also known as the Biz Doctor, and I work with business owners who are in the messy millions of success to transition from operator to owner to have more of the freedom that you started your business for with the right teams and operations. And to Kaitlyn's point, so much of my work is about re-clarifying the vision for your business and your life so your business can fit around your life instead of trying to fit your life around your business. So I love what you all shared, and I think it's a really good segue to my next question of what pieces of finance do you think most business owners and honestly most women miss that is actually putting them either at a disadvantage or hurting them because they don't have that financial clarity and piece of the whole puzzle? Whoever wants to go first, you can.
Well, I can start. I mean, when I started my company and it was making $0, that did not stop me from setting a goal for what I wanted.
Hmm.
And I think I also had the advantage of going into starting my business as a certified exit planning advisor.
Yeah.
So I knew how to reverse engineer the outcome that I wanted.
Mm.
But I had to start with my personal vision. And I think people can be hesitant to just set a goal. I think they think that it like has to be concrete and it doesn't. But to give you an example, so like I started theory at age 29 and I said, okay, what I'm going to aim for is I want to be work optional by age 60, spending $30,000 a month. At the time, I was spending like 12. It was before we had three kids. Now we spend closer to 22 to 25, but 30 felt like very spacious. And of course, I'm like a financial planning nerd, so this is adjusted for inflation, like $30,000 in the future. But I was like, let me pick a goal because I know from the Harvard study, the 3% of people that write goals down are the 3% of people that achieve them. I think
Hmm.
people can be very hesitant to just pick a direction and start going.
Mm.
So, which I call our North Star. So I picked a North Star and then I quantified that. What that turned out to be was if I did it purely through more of a lifestyle business, which is like my saving and investing is going to secure my financial freedom. That translated into saving and investing $13,000 a month. That informed so much of my pricing structure, the amount of clients I was going to take on. And like so much of my vision for theory was founded in those early numbers. Now, theory has since changed. I started as a solopreneur. I've transitioned into now having a team of 9 people. So I've transitioned from a lifestyle business into what I would categorize as an enterprise business, in which EBITDA is very important. And so, but I've never lost sight of the North Star. And so when I was switching from being a solopreneur into having a team, I went to my CFO and said, show me how this transition still gets me to accomplishing that North Star. And I think it's like so important for people to start with that level of intention. And people can think, I think one of the biggest mistakes is people think, well, when I get to 7 figures, I'll do that. Or when I get to 8 figures, I'll do that. Do it with zero. You don't have to be making anything. This is a free exercise. And this is where I think knowledge is power because it informs so many of the decisions that you make along the way.
Mm-hmm. Yeah. Such a good
That's
reminder.
great.
Thank you. So
Taking
sorry
that to heart.
to round this out, so now theory has enterprise value. So the best thing that I could do is continue on with the saving investing that I've been doing because that will lessen the pressure on the sale of theory. And in an ideal world, yes, eventually I will sell theory. I will likely sell it to my employees. It will likely be an internal transfer for which I am willing to take a lower price tag for an internal transfer. And if I can secure my own financial freedom outside of the business, I'm less attached to what that sale number has to be.
Ooh, I think that's a really big point that we get to maybe pivot to about using your expertise to get your clients to detach from the business because I think that that's something that's huge where they see their business as their only vehicle to build wealth. But what I'm hearing is actually if you use it as the motor to build wealth, then you can actually have multiple streams of wealth, even if an exit isn't, a 10x multiple or $1 billion, whatever it is. Because I think, what is the number? Something like 60% of businesses in the next 10 years are going to get sold. Is that the number? I think it's something astronomical like that.
I mean, there's I would say I don't know, sadder number is that most businesses don't get sold.
Right. 80%.
Yeah.
80%.
And
Wow.
yeah. And much like, you know, it's a little morbid, but when people think about like end of life planning, like a lot of people are like, oh, like whatever. Okay. Everybody's going to have an end of life. So
Mhm.
whether we want to talk about it or plan for it, that's still happening.
Mhm.
And when you can get over that hump, it makes kind of talking about it a little more. It's the same thing with your business. So many people just start their businesses
Mhm.
and a couple of things happen. They're really good at whatever they do. They're the Flurgenbergen expert, but they have never run a business before.
Yep.
They don't know what a P&L is. In all likelihood, it's probably just them. So they're like, oh, I have money in the bank. Like I'm okay. But they're
Mhm.
not thinking about what Kaitlyn was saying, which is, that's essentially a job. That's not a business. And so in
Mhm.
order for it to become a business, yes, they have to create enterprise value and the business has to be worth something without them in it. And so I think that that's a super important thing to be thinking about. And certainly over the past few years, I've unfortunately seen a lot of business owners exit not on their terms. And
Mhm.
they've exited because COVID exhausted them and they just want to exit the business sooner than they thought.
Mhm.
Um, or COVID unlocked a big hole in their business and they weren't able to fix it post COVID.
Mhm.
So I think a lot about that with my business owners, and to your point, Lauren, detaching yourself from the business. It's so hard. It's your blood, sweat, and tears. But
Yeah.
the more separation you can get, I think the easier it is to kind of think about the business and also be honest about it.
Yeah. Well, I think, I always say everybody exits, but there's 5 Ds, right? Like death, disagreement, divorce, distress. I don't know what the fifth one, I can't remember what the fifth one is, but like everybody's going to exit at some point. So you might as well have it be, or try to have it as much as you can on your terms.
Yes.
Yeah.
Yes.
Well, and
Yeah.
I feel like what I've seen is that business owners underestimate the amount of time that they need to be planning for this.
Mm.
Absolutely.
I mean, it's not 5 years. It's really thinking about it as soon as you get to that point where, you feel comfortable that your business is surviving. And the next thing to think about is, okay, what is my exit? So I see a number of business owners who, a year out start talking about, oh, I'd love to sell it in a year. And you're not gonna get the return if you haven't been pulling the levers to get to the right spot. So that is a long-term thought process.
Mm-hmm. And speaking of levers, Kaitlyn kind of alluded to this, but I think a lot of business owners incorrectly assume that they have what I would call a legacy or enterprise business, and really they have a lifestyle business. So, from your guys' perspective, what advice would you give to a business owner who maybe has a little bit of delusion around what kind of business they're actually running, um, and helping them determine or decide if they do want to just stay the course and have a lifestyle business that unfortunately most lifestyle businesses, when the business owner retires, the business retires versus having that legacy business that can live on past you being the business.
I mean, I think one of the it's such an easy exercise. And Kaitlyn, I love what you said before about goal setting, right? It's free. It's a easy, one of the best exercises that I, encourage our business owners to do is, what happens if you are gone from the business for a week, a month, whatever that time frame is. And a lot of people will joke, they're like, oh, I could never, whatever. And I'm like, no, seriously, like, you know, I hate to use the hit by a bus scenario. So I'll go with something more positive, which is like,
They take a vacation.
right, offered a free trip to Italy for a month, but you can't be on your phone.
Yeah.
What really happens to the business when you're out? And if that business can't survive, and there's a lot of different ways, that means, that's a pretty good indication that you're a lifestyle business, not an enterprise.
Mm-hmm.
And I think the last piece of the puzzle, right? You operationalize, you get everything, whatever. But if you are the chief revenue generator in your business, that's oftentimes like the last thing I see, the last hurdle for lifestyle businesses to get over is, what's the funnel look like if you're not driving the business forward, right? Nobody cares about the business as much as a founder.
Mm-hmm.
But what does top line revenue generation look like if you are the chief evangelist or chief seller in the business? What it looks like is your business goes away, right? Because your client, like, there's going to be client attrition,
Mm-hmm.
and then there's going to be nothing left. So that's, for me, I think the biggest identifier, and easy to identify, right? Go away for a month and see what happens to your business.
Yeah. Yeah.
And I think just to add on to that, a huge part of Theory's mission is getting women introduced to the process of having their business valued very early, because evaluation is just a square in the face report card of where you're at and the strengths and weaknesses of that business. And I totally agree with Jennifer. Like, our processes are solid. I could easily go away for a week at this point in time, but I am the chief revenue officer of Theory. And so and that came back in our valuation. Like we're strong on a lot of categories, but we are weak in sales and marketing because that is dependent on me. And to Cheryl's point, it's not like the click of an ETF. It's like that takes years to build, to replace me, to get a funnel that is proven, that converts like I convert. And I think one of the coolest things is that all these things like reinforce themselves in a really positive way. So it's like the more freedom that I gain as a founder, the more valuable my company becomes, the more wealth I'm creating because my company has become more valuable. So it's like all these things head in the right direction. It's just getting people to recognize how important it is.
Mm-hmm. Mm-hmm.
There's such a need for just a continuing thought process on training your replacement.
Hmm.
Um, I mean, I feel like that with, all levels, that should be the goal. And as a business owner, thinking early, if that's truly, your goal, then you not only need to be spending time on growing your business, but you need to be spending time on training your replacement.
Mm-hmm. Mm-hmm. I talk a lot about your bench with my clients because this is a little controversial, but I think the number one job of a leader is to create other leaders. And if you're not systematically creating leaders and a bench, and not in a bench that like wastes money, but a bench in a way that reduces risk and increases continuity when you are out on vacation or God forbid you get sick or something, you don't lose that institutional knowledge. Because I think that's one of the things that is, I see such a concentrated risk in the business is it's actually the business owner and all the institutional knowledge that they've never gotten out of their brain. So that's
Great.
something we work on a lot. Before I go to my next question, just real quick, I always say that revenue is a lagging metric. So give me your 2 cents on business owners who are running their business based on revenue.
No,
No.
no. I mean, it is the most frustrating thing. It is part of the reason that I named my company what I did is um I came from media and advertising, and that is a top line driven business.
Mhm.
Everyone is focused on that, and also vanity metrics, which I can't stand.
Yep.
Um, and they're, to Kaitlyn's point, instead of focusing on, that top line number, if you're focused on either a net operating, dollar amount or percentage, there's a lot of ways to reverse engineer that, right?
Mhm.
It doesn't just have to come from top line growth. There are so many different levers that you can pull, right? Margin expansion, decreasing your operating expenses. If you are just focused on revenue, there is only one way to do that. And you're not focused, right? You can, like, not all revenue is good revenue, right? If it's loss leaders, if you're doing it at the expense of margin, you're doing it, at a loss, and which we see a lot. Clients are like, oh, but I got this great account. I'm like, the great account that didn't pay you, like that's a
Mhm.
favor. That's not revenue. What are we
Yep.
doing?
Right.
So I am always laser focused on kind of the bottom line. I think great concept that it's a lagging indicator, but it's just not a good indicator for, the strength of your business at all.
Mhm.
The pressure that can cause with capacity. I mean, do you have the capacity for that revenue, and are you delivering the best product to your client because you are focused on that top line?
Mhm.
That can cause bigger problems than most other factors.
That's so true. That's so true. Revenue does not fix everything. Sometimes it
Correct.
actually makes it quite worse. And I say one of the questions I ask in my diagnostic is if your revenue doubled tomorrow, what would break?
Mm. And I would say from the wealth creation standpoint, this is where it gets a little tough for me when I'm on like podcasts and such, because you don't need to be running a seven-figure business to create wealth. You can run a highly profitable six-figure business and recognize the same outcome as somebody who sells for 10 or $20 million. And that's why it's important to have clarity on what is the outcome for you, the founder, and how do you want to get there? Because you can get there with less stress running a lifestyle business, or you can go the enterprise route. For me, I kind of realized along the way that I did really enjoy mentorship and I did really enjoy leading a team. And so but I intentionally, I was at a crossroads and I intentionally went the enterprise route. Whereas I think some people just kind of like fall into it because the revenue is growing. And so if we can help people make intentional decisions along the way, I think we'll reduce the regret that they have, hopefully.
Since you were at a crossroads, if someone is at a crossroads where they're trying to decide which do I go left, do I go right? What are some questions they can ask themselves internally? Because I loved what you said about you enjoy leading and mentoring. And I think a lot of business owners wake up one day and they're like, "Oh shit, I have a team and a business and I don't actually love doing these things. I love solving the problem that I started my business for." So what
Yeah.
advice would you give to someone who's at that crossroads?
Okay, well, this probably isn't going to surprise you because you know how like woo and spiritual I am.
Yes.
I looked at my human design.
Mhm.
I looked at my Gene Keys blueprint and I looked at my Enneagram, and I had a really hard conversation about with myself about like what is it that truly lights me up?
Mm.
And truthfully, there are people who are more passionate about diving into the weeds of financial planning than me. I am more passionate about the mission and being the throat chakra, the messenger
Yeah.
for that mission. I really enjoy conversations like this. I really enjoy being on podcasts, being on sales calls, being at retreats and educating and getting live feedback. For a long time, my ego was wrapped up in, oh, my value is my skill set. My value is my knowledge. As I grew as a person and a founder, I was able to be honest with myself that I actually enjoyed the high level far more than the details. And so that level of self awareness allowed me to say, you know what? There are more talented financial planners or financial advisors out there that I can go and hire. And I can actually spend more time doing what I love and what comes naturally to me, which is developing relationships and speaking and educating. So for me, it made sense to go the enterprise route. For other people, I do meet other people, like especially attorneys, who end up resenting the fact that they've built a team because they love to do the work itself. In which
Mm.
case, they have to come back to, is it really a lifestyle business that I want? For me, the answer was no. But for many practitioners, the answer is yes.
We see a lot of that. And I would say lack of self-awareness, but I think it's also just even I myself, I spent 25 years in corporate finance, and there's, an Excel spreadsheet hates to see me coming. Like I love it. Like that's my jam. So when I started my business, I was like, I'm going to hire someone to do business development. I will take on all the fractional CFO advisory work and then, whatever. And I found out I love selling. I'm super passionate about it. I love what I do. And so yes, the business ended up changing because I was honest with myself about what it is. But that realization, I think, only comes from brutal honesty or having someone like Lauren in your corner, but you have to know enough to bring a Lauren in to tell you, like, hey, super interesting. I know you think that A, B, and C lights you up, but it actually doesn't.
Yeah.
And,
Mhm.
let's be honest about that. And just, taking that a step further, just getting people to be honest about their businesses. People ask me, like, what does a fractional CFO do? I'm like, a lot of times I'm the mirror that you don't want to look at. I'm a board of directors that you don't have, but I am really just the person that's most honest with you about what the business is and what it isn't.
Yeah.
And I think you can, I'm sure in many ways, I know Lauren, that is what you do, but I'm sure Sherrill, and Kaitlyn probably have to have those conversations as well. Mine are coming from a place of, well, my business has 50% margins. And I'm like, it really doesn't.
It
And
does.
they're like, well, it used to. And I'm like, it actually didn't then either.
Yeah.
I will say, Jennifer, I also think for women in particular, I love them having a CFO because I think women are inclined to like give the shirt off their back
Mhm.
or have a harder time saying no to things. I know it's a sweeping stereotype and I'm making it about myself too. But I love having a CFO to be like, this is a competitive salary. This is what we can give in terms of bonuses. This is a generous profit sharing plan. Like, I need someone in my corner because otherwise I would give the shirt off my back. It's just, I'm a mother, I'm maternal. I want everyone to be happy. And yet I also know I was an athlete. So I also know I have always needed a coach to get to where I want to go and to help me stay disciplined. And I think that is a huge piece of the value for CFOs.
I was just going to say the same thing about women and, making these decisions. And I think that it's just an especially difficult decision to make for women because most of us are thinking about what is best for everyone else. And when you're running your business, you really need to be thinking about what is best for you.
Mm-hmm.
Probably see that a lot in pricing as well. I see women hesitant to, especially when they start their businesses, they're like, I don't know, this feels like a lot of money. I'm like, it's market.
Mm-hmm.
They're like,
Yeah.
what if I don't get it? I'm like, okay.
Yeah. We
What
need
if
other
you do?
people.
What
Right.
Yeah, what if you do?
But also, if you're getting everything you put out there, your
Too
prices are
low.
too low.
Right.
Yeah.
Mm-hmm.
Yeah.
So,
Yeah. And then people actually question it in that direction where they're like, is this too good to be true?
exactly.
Right.
I know.
Yeah.
There's that sweet spot. And I think we're dancing around something that is so prevalent in the work that I do, which is separating your sense of value and purpose from the business, but also from the doing. Like I think a lot of women especially get sucked into the I'm not valuable unless I'm giving, unless I'm doing. And when you're a business owner, so much of your value is at the higher level, solving more complex problems, collapsing time. And I'm tying this back to AI because I'm seeing more resistance to implementing AI things in your business from women actually than from men because men are like, I don't want to do this. Like, yeah, if something else can do it for me, great. But I think for women, it kind of triggers us a little bit like, well, if I'm not doing those things, like how is that going to impact this relationship or how is this going to impact the business or if I don't have things to do, like how's it impacting my value? So from a financial standpoint, I love how AI is actually increasing profitability in a very systematized and repetitive way. How are you guys seeing AI play into the businesses that you're working with, and what are you telling your business owners about the future of AI?
I mean, for us, there's not a week that goes by where someone tells me that I better get out of this business because AI is coming for it, and um, I'm gonna be out of work.
Mm,
Uh, and so what I am telling people is that one, it's a tool. Okay. It's not doesn't replace a human. It's a tool like anything else, like Excel, like QuickBooks, like any of the other things. And what I'm also telling folks is that there's just a shift that's happening, right? If AI is doing more of the doing, to your point, then we need to be doing more of the reviewing and thinking and and um, opining. Uh,
Hmm.
and for many folks, that's a difficult switch, not because they're not capable, but because they weren't trained that way. So I think that's kind of, at least in our line of business, that's where the shift is really coming from. You have to put on a reviewer's mindset because the work has already been done for you. Um, but in my line of work, we need to show our answers. So, Sherrill, you too, right? You can't just
Right.
somebody at some point is going to come knocking and be like,
Prove
where
it.
prove it. Where'd that come from? And
Hmm.
that's
Right.
for us the one thing where I've seen a real um, there's a real hole in AI because it produces a great answer, but it doesn't tell you how or why. And I I I have to have that. I need a schedule that supports,
Yeah.
your depreciation journal entry for this month, as boring as that sounds. And we haven't found anything that can do that yet.
Hmm.
I think that talking to people about how to really think about their highest and best use and what the value of that is in comparison to, what can be done with technology. And I also think that it's really important to try to be at the front end of things. I never want to be an early adopter. But understanding what's behind it and how it's working and just getting comfortable with it, I feel like is so valuable to then be able to work towards your using your highest and best use. And it is the relationships that I feel like, that's a big piece of what is never going to be a capability of AI. And so focusing on those things, and even if it's just small steps, um, I think incrementally it's going to help most
Hmm.
business owners.
I think it makes us more, it gives my advisors like a mental energy back. For example, they use it a lot with like responding to emails and they'll put the meat of it in, but like AI can provide the warmth or the personability, and like that's precious brain cell energy that they can be putting towards
You're
running an
the
analysis.
best use.
It
Okay.
really is, because like at the end of the day, like it's a relationship. It's a relationship. I don't want to say like game because it's not a game, but like relationships is the currency,
Mhm.
right? And for me, as they've become more successful, like I don't, this journey is already lonely enough for entrepreneurs. Like I want to feel supported. I want a human CPA. I want a human CFO because I want to feel like I am not on this by myself. And I find with our clients, they still come to us for that human affirmation
Hmm.
of like, is it okay to put less than 20% down on a house? Is it okay to take a little bit out of my 401k? Yes, ChatGPT could tell you an answer, but humans are still looking for that affirmation. That's just our conditioning. And so I don't think that that's going away, but I do think it preserves energy for my advisors to be able to communicate in a way that is empathic and emotionally intelligent and enriches the relationship.
I agree. I agree. I talk a lot about mental load, AI
Mhm.
reducing your mental load and your administrative drag. Like I think that that's a lot of where I see it buoying people up. And it's also really interesting because I hear people being like, well, it's not working for me, or I'm not getting the answers I want. And this is a little controversial, but I did a post that said, if you're not getting the answers out of ChatGPT that you want, you're probably also not a great leader or a delegator. Because, like, in order to get what you need out, you have to clearly articulate what you actually want. And I think so many business owners, one of the things that I help them understand with like the leadership work that we do is there's 5 levels of delegation. A lot of people just think there's either you do it or I do it, but really where you can leverage AI is it can do 80% of the things that you don't like doing, and then the 20% that's your magic that you actually really love doing, you can still do that. And so I think AI to Jennifer, what you said about being a mirror, it's a really good mirror on like how well you can communicate your definition of done and what you need. And it's ultimately going to help us be better leaders and delegators and communicate the architecture and strategy of what we need to move our businesses forward. So I'm a big advocate. Um, okay, so now I'm going to ask you guys specific questions for your roles. So Sherrill, I'm going to start with you. What do people not realize about their CPA that's selling that relationship short?
So I think it goes back to what I mentioned before, and that's that so many business owners think of their CPA as you're a historian.
Mm-hmm.
You are reporting the past, and strategically, we have a lot of value. And if we can just be brought in on the front side of things and work, together with the CFO, and the CFO's got the modeling done, and then we sort of pressure test it, and find those areas that you'll also want to consider. Timing is a huge opportunity, and if we can look at things on the front end, sometimes it's not just finding a deduction, but it's looking at 5 years. When do we want to plan these expenses to keep things steady, to offset high income years, things like that. So it's really just being involved at as early as possible.
Mm-hmm. Yes, because I think a lot of CPAs get pigeonholed in the, oh, here are all my receipts for the past 12 months. Just go
Yes,
put it in some sort of thing and file our taxes. But you
right.
know what? Like the reason I wanted to do this roundtable is you can save so much money and increase cash flow and profitability if you just get your financial team working together proactively. So now I'm going to
Absolutely.
toss it over to you, Jennifer.
Um,
What is a fractional CFO? And how does somebody know when they need one? And then if they have one, how do they get the most bang for their buck? Because I think that fractional work
Mhm.
has become such a buzzword, and there are people out there calling themselves fractional CFOs that are not truly fractional CFOs. So
Girl,
let's
you
dive
did
into
not
that.
have to tell me.
Or me.
Or me.
So,
Yeah.
I, wh- what I say, to my clients is, like I said, they're often founder-led businesses or, partnerships, and they've never run a business before. So
Mhm.
a lot of what I do is answering questions the way that a attorney does. So it can be something as basic as we've been using 1099s, we want to move to a W-2,
Mhm.
workforce. What does that mean? What does it look like? If you're thinking about that question and you don't know the answer, who are you going to ask that? You might go to your CPA, but in all likelihood, you don't have somebody in your ecosystem.
Mhm.
Yeah, I mean, I like to say my bookkeepers could all answer that, but it's a different story. So I think a lot of times what a fractional CFO is doing is filling in for, like I said, a board where a board of directors would sit, or, a lot of people belong to executive groups where they bring their problems. But if you don't, who are you mind melding with about kind of ideas? The other thing that we do, well, me in particular, is we do a lot of scenario planning with our clients, because it's, it's great to have a goal. It's great to have a budget. If you don't have a budget, I can't even, that's a whole other conversation. Like, but let's talk about some different scenarios, right? There's a lot of different ways to get to $1 million in revenue. You can have one client at $1 million. You can have 10 at 100,000. Let's talk about what that looks like from a workforce, what that means from an operating expenses. What do you need to service it? So we do a lot of scenario planning, a lot of thought partnering, and quite frankly, a lot of education. What if you can't answer me about what your margins are, we have a problem. You can't answer me about client concentration, we have a problem. So a lot of it is introducing different things to our founders because, I've been doing this a very long time. A lot, I don't want to say scare tactics, but a lot of it is like, I've seen some things and I don't want you to have to see those things either. The other thing that we do a lot of is quarterback the relationship between, and I may have to steal this golden triangle, but quarterback that relationship, because at the end of the day, Sherrill, Kaitlyn, and I can all be telling you something different, and all those things can be true. And the best example I can give is when somebody has to come up with a reasonable salary at the end of the year that their CPA is advising them on. And then they come back to us and I'm like, but you have no cash. That's a very difficult concept if you are not money fluent. That's, or finance fluent. That's a hard thing to understand. But both of us are saying the same thing. So what I try to do a lot of the times is quarterback that relationship or that flow of information so that we're not all speaking to the person and telling them individually what we think. We're working together to say, okay, let's talk to Kaitlyn. Let's take some money out of here to make sure you get paid the salary so you can maximize your tax benefit. And then we'll get that money back to Kaitlyn as soon as possible.
I love that. I love that.
Can I chime in that the fractional CFO, I mean, you have the visibility into the detail of the business that Kaitlyn and I don't necessarily have. And so that communication, again, between the group is crucial.
And the key is that there's an ongoing cadence. So like for us, we have semi-annual, once our clients are in the ongoing cadence, we have semi-annual meetings that run like a board meeting. We're getting a business performance update. In September, we're getting a draft tax return run so that we have 3 months to actually put strategies in place. But we all, I think Jennifer was saying, Jennifer's point, there's reconciliation that has to happen in all three directions. We have to reconcile a balance between how much do we reinvest in the business versus how much do we take out of the business for personal wealth. What do we take in terms of tax deductions versus what do we put into like a Roth bucket, for example? And these are reconciliations that have to happen iteratively as we go. And so having a team that works cohesively together and is operating off of the same vision allows us to reconcile with more fluidity that just it doesn't naturally occur, which is like why I left private wealth and built theory the way that I did, because I'm like, no one's really gonna, even for like massive clients, no one was really like stepping in to take that role. And I also think it's important that you have service providers and partners that approach this with humility and collaboration. Because what I saw in private wealth is like no one wanted to be like the dumbest person at the table. So people would just say nothing. Whereas like we show up and we're like, let's all pretend we're kindergartners. Let's throw out ideas. Like, what do we, if we can level set and be like, we're here for the business owner, it allows people to drop their egos and collaborate effectively.
I love that. And that's a great segue to my question for you, Kaitlyn, of what makes a good financial advisor and wealth partner, wealth building partner? So if somebody doesn't have, because I'm sure people watching are like, oh, I don't have a fractional CFO, or maybe I'm not getting enough out of my CPA, or I need to change wealth advisors. What makes a good one?
Well, I would say first and foremost, just someone who understands your niche better than anybody else. So, for example, like we work specifically with successful female entrepreneurs. So we are very fluent in the tax strategies and the EBITDA, like state nexus, like because we live, eat, and breathe that demographic, we know what to be fluent in terms of conversation. I think where people get into trouble is where advisors in particular, it's like they try to be everything to everyone. They have 200 clients. Like our advisors are only working with 40 clients because that's all they realistically have the bandwidth for in order to provide white glove service. So I think that's important. I also think it's important to ask how they get paid. For us, we run a flat fee model, which allows us to be objective in terms of how we're guiding clients on the wealth creation journey. We don't have a bias towards stocks and bonds because we don't get paid more or less depending on what you hold in terms of market portfolio. So I think it's important to understand, does this person understand me better than anybody else? How does this person get paid? Because tell me how someone gets paid and I'll tell you how they act. What are their motivators? What are their intentions? It's really important to understand those two things in particular.
Beautiful. Okay, I have one last question. I'm going to rapid fire, but before I get to that, why don't each of you tell everyone the best way to get in touch with you or follow up if they want to work with you, or if you have any free resources that they can get from you? Sherrill, you want to go first?
Sure. So our firm has a website. You can Google Atchley and Associates, and we have a contacts page, and my picture's right there, and a link to get in touch with me. And if we we are a firm of 80 people, and if I'm not the right person for you, I will make sure that you're connected to the right person.
Beautiful. Okay. You want to go next, Jennifer?
Sure. Yeah, you can check out our website, I Heart EBITDA. And there's a lot of resources on there, not just about what we do, but a lot of resources about what we've talked about today, right? What's the difference between a CPA and a CFO and a financial advisor? What does a fractional CFO do? When, when should you call someone in? So we've got a lot of really good resources on there that answer a lot of questions.
Beautiful. All right, Kaitlyn.
You can also go to our website, which is theoryplanning.com. And at the bottom of the website, there's a link to book a call with me. And you can also find us on Instagram at Theory Planning Partners.
Amazing. Okay. And then obviously for me, goldenkeypartnership.com and the Biz Doctor podcast, which is ranked in the top 3% of podcasts globally. We just moved up a little bit and we celebrated, thank you, our 100th episode. Okay, so here's the rapid fire last question. For anybody that's listening that's feeling either financially behind or like, oh my gosh, there's so many things that I could be doing, what is one thing that someone can do this quarter that's going to help them shift from, let's say, growth by default to growth by design so that they can have their financial team and business running more like a well-oiled machine? Whoever wants to start can.
I will talk a little bit more just about what Kaitlyn mentioned and just that cadence and that meeting, and have your team together on a quarterly basis and discuss what's happening. Make sure that you're looking at all of the aspects of what are the tax implications, of course. But I think that setting up those meetings, Zoom calls, whatever works, but just everyone touching base at least quarterly until everybody gets their footing is a great thing to start with.
Beautiful. Okay. Who wants to go next?
I would say, above all else, if you don't understand your financials, you look at them, like get in there and look at them. And if they're a hot mess, invest in a great bookkeeper. Like really, the three of us can't do anything that we do without a solid foundation of like what's going on in your business, and investing in that early on is always better. It costs more to fix it.
Yeah. Kaitlyn?
Mine would be Google Retirement Calculator. NerdWallet has a great one. And play around with the numbers and start to think about a financial freedom goal that you would want to set and what that translates into in terms of a savings amount. And another one that is free and easy is get clear on your cash flow. Get clear on what does it cost to be me on a monthly basis. I would tell you, like, we have super successful people come in, and 95% of people don't actually know what they're spending on a monthly basis. And it can be a huge source of chronic but subtle anxiety. So I think clarity can bring immediate relief. And again, it's free. So.
I love that. Okay, we have 2 minutes left. Is there anything that you're like, oh, I just gotta say this before we wrap and make sure that I just get this off my chest? Anything? No? Okay. Well, I have loved having you guys on. I think this was so valuable to see the architecture and strategy of getting the financial spinning plates all moving in the same direction. Y'all, look up these ladies. They are powerhouses. Thank you so much for your time and your wisdom and just taking an hour out of your day to help us have some more financial clarity.
Thank you for
Thank
putting
you,
this
Lauren.
together.
Yeah, thank you, Lauren.
This is
This was
excellent.
great.
You're very welcome. And it looks like somebody in the chat just said, wow, awesome group, well presented, excellent content. Thank you. Thanks for being here. We're so glad. And yeah, what a great way to kick off 2026. So thanks
Absolutely.
everyone.
Have a good
Thanks,
one.
Lauren.
You're
Thank
welcome.
you.
Okay, bye.